All right, ladies and gentlemen, I hope you had a wonderful day. I got another watch list for you, and what I'm going to show you today, if you really listen to it, I'm telling you, you are going to be ready for next week. But before we get into anything, before I go over the trades today, we made a bunch. I got a little bit of the recap and all of that. I want to talk about why I think some people should stop trading options. If you've noticed lately, I've been doing a lot of futures. I've also been doing a lot of shares, and I've kind of shied away from the options, and I just want to talk about it really quick, and I hope that this could help people out. Again, I think people should stop trading right now. Like, low key, bro, I think we should set a date and damn boycott it, but I'm not going that far. I just want to highlight what is going on and how during times of real heightened volatility, the options may not be your friend. So with that being said now, I want to introduce you to Tina. Okay, this is Tina, and Tina stands for there is no other alternative. I know it's a stuffed animal. It seem a little bit weird, but it makes more sense with this chart. And what this chart is showing you is the difference between the 10-year bond yield and the S&P 500's dividend. And what people are noticing is that now that spread is at the highest point since like 2011. But what this is highlighting is that now there is an alternative to buying stocks, aka the yields on bonds are getting so high, the dividend yields on stocks are getting so much lower, it actually makes sense to go buy bonds. Now, I'm not telling you to buy bonds. What I want you to understand is that as the option market has developed over the last couple years, but more so the fact that we are entering real volatility, the prices of options have came up. And as the prices and IV and demand is all gone through the roof, it has created an alternative to options, Chad. That's what I'm trying to share with you, baby. So what I want to highlight is simply that you have other ways to trade right now that may offer a better yield than any of the options. You guys have seen me trade so many options over the years, and I love them still. Again, I'm still going to be making a couple. I will try, but I really am trying to avoid them. But don't get it twisted. I love them, but the reason why I love them was because it defined your risk. You couldn't only lose as much as you put in, and it allowed you to get a lot of upside for a very little amount of money. But now as the price of premium goes up and it costs a little bit more, or you're watching the volatility again, I mean, you've seen this year, it starts to change. Well, wait a minute. If I have to pay so much to get into an option to pretty much get the same reward, that's why we've been going with shares and again with options. So again, I just want to give this to you, and this is what I've been bringing up. Yesterday, I showed it. UNG goes right past to where I bought it last week. The options are still down. Today, I cut out a DoorDash. Again, here's another example. You would have been down at 80 cents if you bought this option at $3. I cashed out from buying it on the same day as when the option was $3. I made $100 today. Those options are down 90%. Now, granted, go look at the DoorDash options. Some of the ones with a little more time, they are there, and that's what I will tell you. There is option trades that you could hit. I'm not saying options are dead. I'm just saying few and far between, and you have to be careful. You got to be in early, got to get in at a good price. But once the premium and volatility goes crazy, or if we enter more volatility, I want you to understand how you could slow the game down, play it with shares. Again, we're going to talk about futures, but overall, don't be a victim to premium and don't put yourself in this position where you can see what is happening in the market, but if you're off 1 or 2 weeks on the win, it is hurting you, but it's hurting you a lot more than it would have last year or the year before that, because premiums are elevated. So hopefully we're on the same page. Let me know what you think. Do we start a boycott? I don't know, Chad. You let me know. I love you either way. But now, oh wait, youtube.com/the stock market. You better like the video. I'm gonna see you there in the. It's gonna be hype. But now let's run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Fingers to the down.
So right off the bat, Chad, I was getting a little too hyped there. I want to start with this thing, and this is what I was saying in the beginning of the video. If you understand what I'm about to show you, you should be a little bit more calm. understand what we're going to get in tomorrow with that options expiration. But now this should highlight to you why Powell and next week is really where now then you could start to get mad after that, or then you can start to say it's manipulated, this and that. We'll have a little bit more information, but don't forget what happens after options expiry. So here is the chart. I've been saying this all year, and I brought this up at literally a couple weeks ago at the August expiration. You see that gap down? And that date, that was literally the last big options expiration we've had. And look at the move on the market since. Obviously, there was events in Jackson Hole and CPI, but again, you're going to get Powell next week and all of that, but we're about to have a lot of money clear off the table. And this year, I think now it's like 70% of the bigger moves have happened outside of option expiration. Again, that stat, I'm making it up based off of what I showed you with all of this. I think it's around there though, but hopefully you see what I'm saying. Tomorrow's going to be a big day. It's going to be really confusing, especially after today. But just remember, next week, Monday, Tuesday, and then Powell on Wednesday, that's probably where we're going to see the big action. Now, coming into the second key, we did see a lot today. And again, I said if today was calm, tomorrow would be big and vice versa. But today was kind of in the middle. And if you notice, today was a watered down version of yesterday. You had a gap. At this time, it was a little bit lower. Then we went up, shot down, went back up. And you did the same move, but it just didn't have the end of the day rally. It literally was a lot like yesterday. It was just watered down. And you didn't get that same effect and same level of stability. So now, coming into tomorrow, I brought this up, University of Michigan consumer sentiment, that comes out 30 minutes after the bell tomorrow. That is going to be the driver. Why? It is related to inflation expectations. Consumer sentiment, that's one part of it, but in the consumer sentiment data, they have a survey where they say, what's your 1-year expectation on inflation and what is your 5-year expectation on inflation? Why this is important? Because again, we started moving after CPI, that's inflation related, and what the CPI this week showed us was that, expectations are going up and there's evidence that inflation is getting entrenched, and that is something the Fed does not want. But now tie that into tomorrow's data. If consumer expectations on inflation are going to rise, that will take a knee to the market's legs, and that will be bad. If it is good, that will be good news, and it should fuel some of a rally. Granted, we still got to deal with the options, the expiration, and all of that. So it's very simple tomorrow. Watch the ranges. The next level below here, we start to get to those lower levels. Here's the chart pretty much from here on out. Next level is 3878 and then 385. Again, there's like a little bit off on the decimals, but pretty much now, depending on what the data is tomorrow, we'll probably move within these ranges. Maybe we'll hug 390 a little bit, but again, all bets are off for tomorrow. There's a lot of big money on the table. A lot of dead money came back to life, and now whatever else we mix, we did have a lot of things after hours. This might get in the way, and now that's the final key. Tomorrow's all about consumer sentiment, then getting prepared for Powell into next week following expiration. But we had bad FedEx news after hours. They had bad earnings. They got rid of guidance, and I think something about Amazon and a partnership with like UPS or FedEx, it went through, but FedEx is down 11%, and that's huge. And this is related to travel and that IYT. We're going to talk about it, but that will probably be a driving narrative tomorrow, as well as now the China yuan. We've been talking a lot about the yen today. The yuan went above 7, and like we said, I didn't really react too much today. What you want to watch for is the fix tomorrow. If the Chinese government fixes it above 7, that's going to be a little worrisome. If they do strengthen it, you could kind of see them defend it a little bit, but depending on what it does, weakening or strengthening, that could also be another driver. Other than that, it's going to be all eyes on the United States, the expiration, and getting ready for Powell. So I hope you're ready, but let us get into the plays. So right off the bat, I made a couple of day trades. I mean, we did a lot of ES day trades, but I do have a couple of plays, and we already brought this first one up. It's going to be FedEx. It had bad earnings, and they removed guidance, and this is related to IYT, so I have exposure. Remember, I was bringing this one up. It was fluctuating between gain and positive. That one's going to take off tomorrow, but after all of this railroad stuff in travel, I'm telling you, IYT travel stock stocks could be a leader in terms of are we going to go lower or not. So depending on how tomorrow trades, I would watch FedEx as a signal and also as a potential play, but it's already moved a lot, and that's a big one. But that is play number one. Play number two now, GE. They were weak a couple weeks ago. If you remember, they cut guidance, and it was after some of the Snapchat and NVIDIA stuff, and people freaked out with GE. But they dumped like 6% after hours today, and they had a pretty much a downbeat presentation at the Morgan Stanley conference. So now it dropped. CFO said something about guidance or supply chains weighing on the profit. But this one, slow mover, silent behemoth. This could affect the Dow tomorrow, but this one definitely can move. And again, just like FedEx, watch for kind of some of those signals tomorrow. But that is play number two. Then finally, play number three, baby. I love this one. /MES. This is a micro SPY or SPX future and paper trade it. I am not saying you should play this. Obviously, you should know none of this is a recommendation. Option trading is extremely rare. I've been telling you for years, bro. Anyways, but MES, I want you to paper trade it. We brought this up today. Again, you can paper trade and there might be a delay and it may not be accurate. That's not what it's about. Well, eventually you'll get used to it and you can make paper trades and try to mimic a strategy. That's one thing, but I just want you to get good form, baby. That's your elbow in, follow through. I want you to be able to understand how these futures trade and be able to say, okay, how much is one E-mini going to move me? How much does 10 points, 20 points cost $100? See if you can handle it and deal with it. Because again, futures have a lot of liability. You could lose more than when you put in. It's literally option trading on crack. However, there's pretty much no premium. It just operates and you have to buy way bigger size. That's the difference. But like I'm saying, paper trade it. You watch me do this from the beginning of the year. Again, as I started noticing things happen, I started with the commodities. I was like, wait, there's only one way to play wheat. That's why we had to start utilizing futures. I paper traded all of them. Even the yen trade, I just closed out $6,000 on that. I was paper trading them first. So paper trade and understand how this moves, get used to it and get prepared for down the road. And I really think this is going to add a great tool under your belt, but simply a micro E-mini is going to beat any SPY option in this environment. What I'm trying to say is that there's no premium. You can hold it, a little bit more flexibility, and it still gives you gains where it's like, it's not small. Remember, there is inherent leverage in all of these futures. So we talked about it a lot today. I just want you guys to get familiar. Again, it's not that intimidating. Go on Thinkorswim, paper trade at the very least. You're going to have familiar by understanding how it works. And then depending on what happens, you will always have this tool in your belt, ladies and gentlemen. But those are the main plays. As far as everything else, like I said, I made a couple of trades, but let's actually start with what I am holding. And today I added a couple more, so I may be missing some. And always, so you guys know, you could ask me on stream and I will pull it up. I'll show you the play again if I ever miss anything. I have a couple more that I'm holding. We have some for swings and day trades, and then we're closing out a lot. So I know it's hard to follow along with, but if you ever have questions, if I do ever miss it, definitely ask. I do want you to see this, especially since I've been doing a lot of shares, and really you're getting to just watch how it plays out. So as far as what we're holding, there's the mini future. I'm up 280 on that today. I was holding that over the last day or so, so that was good. Adobe, I opened a trade. I saw the drop and I went long on it today at 324 on only 25 shares, but I lost $500. That means I lost $10 a share. It plummeted. I was up on it a little bit, but I'm still kind of confident in that one. Going to be holding that. The AMD, still short from the beginning of the week. Remember, I covered the AMAT, holding that. The Arch, that one went down again, so we're still holding that one negative. I opened a short on Boeing with 50 shares at 147.89. Then IYT, it's up now after the after hours. And then Tesla, I made some money back, but remember, that play was going up and down, but it's clapping me, but I did add to it. I now have 35 shares short instead of 10. So that's what I'm holding. And then Yosh, I'm down 17. Again, there's like the SMMT, and then there's like the UNG and Boyle, and I don't think I'm missing anything else. But again, if you have any questions, let me know. I would love to show you, baby. Don't worry about it. But as far as today's trades, the first one, I took those profits on DoorDash. Remember, this one was like 3 weeks ago. I was down $300 on this, or like $250 when it went down. Got to walk away with like $120 profit. Saw I take that one, opened the Adobe, got clapped, shorted Boeing, then it went against me, added to the Tesla again. That was my first average down this whole week on it with 10 shares, so half the amount, kind of giving myself more flexibility. And then here are all my futures trades, and I did it again. again, I made another trade at nighttime, and that got me like 150, 170 or something like that. So it says I realized like 500 something today, but we did like, I think like $300-400 today outside of it or something like that. But you could see the first trade. This is a full size, or I think they call it the E-mini. This is the bigger one than the micro, but I shorted it in the morning at 39.36.25, and you see 6 minutes later, I covered. That one was like, I think $100 or $200. And then I opened another one in the day, but this time I went long after we were flushing, and this was a literal 27-second trade, 391.350 to 391.625. Again, the size, the leverage, that was still like $120, $150, closed out of it, and then that was that, and then the one from the night before. So realized a lot on that, got to realize DoorDash, and then any of the other plays that we're holding. But those are the main plays, again, and all the other plays we made. But I'm just going to be watching tomorrow. Energy, just keeping my eye on it. Again, you know how I've been in love with it. Watching some of the bank stocks and then seeing, do we get any signals on any of this stuff? But again, GE and those travel stocks, I really think that's going to be fire tomorrow. And then depending on really what is a lag or a leader, I'm sure we'll get a lot. But again, it is going to be volatile. We're probably going to trade a couple of futures, but just be prepared for craziness. And even if it's not crazy, it's all about next week. So I hope you're ready, baby. But that is your watch list, ladies and gentlemen. Make sure you're hydrated, healthy, ready to go. Make sure you post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. You know what I need you to remember? You didn't fail. You know why? Answer this question. Did you fail? Okay, sure. But did you succeed before you failed? Oh, yes. Stop playing with me, Chad. What I'm trying to tell you, keep your head in the game. Stop hyper-focusing on the little L's. It's cool to hold the L. Take the L. Be a man about it, baby. But all I'm saying, don't play yourself and say, oh, I failed after I succeeded. Don't get mad on the little shit. You got to control yourself. Got to control it. Control the pressure and don't get emotional, Chad. That's it. Everything is very simple. You are in control. It is game time, and you have already made it this far. We are 1 quarter away until we enter another year. So stop playing with me. Let's go, baby. It's game time. I'll see you in the morning. I'm going to even see you the next week. We're going to have fun on Friday. And that's it, Chad. Let's go. Stay blessed. Control everything. And get that discipline. Don't let them scam you. That's it. That's it. I'm here. I'm not telling you to go ape. I'm not telling you to hold the line. I'm telling you, don't let them scam you and don't give them your money. Stop. Oh, I love you, Chad. So let's go. It's game time. Have a wonderful sleep. Drink some water. And I'm going to see you in the morning. And thank you for being positive. Amen. Amen. I love it. I love the vibes. Love the vibe. Let's get it, baby.